Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena. This is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow coming in on the stocks or on the back of the technical charts. But first, before we get started with all the stocks that are in focus today, let's quickly take stock of where the markets are at. Let's see how the markets are panning out. In fact, markets seem to be pretty range bound. In fact, Nifty, after seeing those record-breaking levels yesterday, 26,000 on the index, we did see profit booking coming in, and in fact today also it is it's pretty range bound. It's hovering around the 25,900 levels is what we see. Sensex 2 is in tandem with Nifty. Nifty Bank is holding up in the green with gains of 86 odd points. The broader markets are under pressure. Mid cap is racking the most with cuts of 0.8%. Small caps too trading with cuts of 0.5%. So broader markets also trading in the red, and also if you look at the market breadth, it is tilted towards it's in favor of the declines. But sectorally speaking, Nifty IT is also reeling under pressure, trading with cuts of almost a percent and more. And in fact, all the names, all the constituents are in the red. LTI, Mindtree, Tech M, Emphasis, LTTS, all trading with cuts of more than 1.5% right now. Holding on to the green, or the top sectoral gainer right now is Nifty Media and Nifty Realty, that is doing well in trade today, trading with gains of almost 1%. So that's the case as far as sectors are concerned. But let's look at the top gainers in Nifty: Power Grid, NTPC, Axis Bank, Grasim. They're all trading with gains of almost 1.5 to 2%. On the losing side, we have LTI, Mindtree, all the tech names. In fact, the Nifty IT is under pressure, and that is also pulling down the Nifty index. LTI, Mindtree, Tech M trading with cuts of almost 3%. Tata Motors, Titan, JSW Steel, Wipro are also on the losing side of Nifty. So that's where largely how the markets are panning out right now. Nifty hovering around the 25,900 levels. But moving on and getting you the technicals and the news flows for all the stocks that are buzzing away in trade. Nagaraj Shetti, Technicals and Derivative Research Analyst, HDFC Securities, is joining us on the technical. And from our research team, we are joined by Jinay. Hi, good afternoon to both of you, and thank you so much for joining us. Let's get started with all the stocks that are buzzing in trade today. The first up is Ease My Trip. Now, the shares of Ease My Trip were soaring in. Ease My Trip is, I beg your pardon, traded with cuts of almost 19%. It is picked up from that, but still it's nonetheless trading with cuts of almost 13% to hit its 52-week low. And this happened after the company's promoter, Nishan Pitti, offloaded a 2.7% stake in the company. It was previously reported that Pitti might offload a stake of up to 8.5%, but the official parties involved in the transaction as of now are not known. As of June 2024, Nishan Pitti held around 28.13% of the company's equity. Well, that's the according to the data that came across the exchanges. But a total of 64.3% of the equity in the company is held by the promoter and the promoter group, while the remaining 35.7% is held by public shareholders. On the back of the stake sale in Ease My Trip, share is knocked down and trade still under pressure, reeling with cuts of almost 13%. But moving on to Nagaraj, coming to you, Chambal Fertilizers is what you picked out. Nagaraj, tell us what are you seeing on the charts for this counter? Fertilizers, the fertilizer stocks have been on the radar for a lot of techies for a while. Tell us, it has given us some decent gains of 50% in the last 6 months. What is the upside? Why have you picked this counter on the charts?
Hi, good afternoon, Ankita. Chambal Fertilizers has been in a larger consolidation over the last few months. Recently, it made an attempt to break above the hurdle of the downsloping trend line. Technically, whenever after a sharp up move, such underlyings moves into consolidation larger pace, then eventually it breaks out above the hurdle. The intermediate trend remains positive for this stock, and I'm expecting this stock to move above and break above the important resistance of around 525 levels sooner. So overall chart pattern is looking positive. Once it breaks above 525, I'm expecting it to reach towards the next resistance of around 570, 575 levels.
All right, Jinay, coming to you, Piramal Pharma is what you've picked out for us. We also had the management of Piramal Pharma. But first up, tell us, there are a few brokerage notes that have come out. Tell us, what are these brokerage notes saying?
So firstly, the company had conducted an analyst meet, and we have an antique note from that, where the company aims to achieve a revenue of $2 billion by CY 2030. Also, they believe that the CDMO segment would take the key catalyst for the growth, driving the growth ahead. Also, differentiated portfolio is something which will drive the complex hospital segment. We also have a note by Jefferies, who are maintaining the buy rating and given a target price of rupees 260. Now, what they believe is the company is aiming to double their revenue and triple their EBITDA by FY 30. Also, the increasing share of innovator-focused CDMO contracts will remain a key overall margin improvement for the company. Apart from that, steady growth for hospital generics and improving margin profile for OTC will also be a key watch. They are expecting an increase of FY 25, FY 26 EBITDA estimates by 4 to 10% on stronger margins. The company is right now trading with a gain of 4%. Earlier, it was trading with the gains of about 8%.
Alright, that's Piramal Pharma trading with gains of 3.5%. But Nandini Piramal, the chairperson of Piramal Pharma, also spoke to our channel and spoke about the debt to EBITDA reduction plans going forward for the company. Let's go across and listen into what she had to say about it.
I think we'll manage capex overall. I think the overall intention is to reduce our debt to EBITDA ratio to 1. So we will we'll balance it through increasing EBITDA and cash flows. One of the things we've seen a doubling of commercial on-patent revenue, and from 9 molecules in, I think, FY17 to about more than, 17 or 18 molecules now. And so that's seen a growth, and that's can be reflected in on-patent growth. We also have a number of molecules which are in phase 3, and over the next 3 to 5 years, about half of them should become commercial.
Alright, that was the management of Piramal Pharma for you, talking about reducing the debt to EBITDA ratio to 1. But coming to you, Nagaraj, you have picked out Ramco Cement for us. Tell us, what are you seeing on the charts for this particular counter?
Yeah, this has been in a constant uptrend over the last few weeks. We observed the positive pattern of like high tops and bottoms. This was sustaining above the support and currently placed at the edge of breaking above the crucial resistance around 860, 865 levels. And the overall chart pattern is looking positive. It has closed above the crucial 200-day EMA. I'm expecting further upside momentum is likely to continue for this stock price, and 900 is going to be the next hurdle to go on.
Alright, Nagaraj, thank you for that. That's Ramco Cement on the charts. But with that, it's time for a quick breather. You don't go anywhere, because after the break, we're getting you some more buzzers in trade. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. And joining me now is Shrishti Sharma on the show as well. Let's get started with all the stocks then. Delta Corp is in focus today. In fact, the stock was soaring away more than 8% in early morning trade, following the announcement of a significant restructuring initiative, and the board of directors of the gaming and the hospitality firm has approved the demerger of its hospitality and the real estate businesses into a newly formed entity, the Delta Penland Private Limited, or the DPPL. Now, Delta Corp currently operates in multiple segments, including casino gaming, online gaming, hospitality, and real estate. This strategic move aims to unlock the value and create enhanced growth opportunities for both the sectors. Now, according to the demerger details, the DPPL will be a wholly owned subsidiary of Delta Corp post the demerger and will carry on the hospitality and the real estate business. Now, the company is in the process of converting from a private limited company to a public company, pending approvals, of course. But the demerger will be done through a composite scheme of arrangement under the section 230 to 232, read section 66 of the Companies Act 2013. And upon the scheme coming into effect, the shareholders of Delta Corp will get 1 share of DPPL for every share held for Delta Corp. Now, this will ensure that all the shareholders of Delta Corp will be ultimately the beneficiary of DPPL as well in the same proportion. On the back of this, of course, the stock is soaring away in trade with gains of almost 8%.
Well, moving on then, and let's also hear out, as India celebrated its 10 years of Make in India, we at ET Now caught up with an exclusive conversation with Piyush Goyal, Union Minister, to understand how realty as a sector is going to play a major role ahead and how India will be benefiting from it. Let's listen in to that excerpt.
We had 1100 real estate developers of repute come down from India for a 3-day conference in Australia. They have been studying Sydney city for new technologies, emerging construction styles. And will you believe it? They are so super excited about the growth opportunity in India. They told me that they expect in the next 30 years to construct twice the number of buildings that India has, all of India has today. So what was constructed in, I don't know, hundreds of years in India until today will be tripled in the next 30 years. Look at the huge opportunity for the entire ecosystem, whether it's steel, cement, furniture, carpets, electricals, electronics, air conditioning. The list just goes on and on. And will you believe what happened when I was talking to the Australian government today? Their biggest challenge is housing and construction. And when I offered them that I can send my realtors to Australia, and I have 1,100 of them in Sydney already doing an international conference, they were super excited. And I've already told the CREDI president to quickly mount a delegation to Australia and get cracking to build in Australia, which will give a big boost to make in India, because our products from India, prefabricated steel structures, slabs, our furniture, our electricals, our electronics, they will all have a huge market for the 1 million+ homes that Australia needs to construct. So the future is bright. America will need to reconstruct. Europe will need to reconstruct. They're all 70, 80-year-old infrastructure in these developed nations. This is our time for an outreach to the world. Make in India will support export from India, will support serve from India, will invite innovate in India. It has tremendous potential and multi-dimensional opportunities.
All right, moving on then. Now we are joined by Nagaraj Shetti, who's the founder of Srivari Spices and Foods, who's joining us. Hello, Mr. Rathi. Thank you so much for taking the time out and joining us today.
Sure.
Mr. Rathi, in which FMCG business verticals is Srivari currently into? Tell us about your business and what are the plans going ahead for the company?
So presently, Srivari Spices and Foods Limited is working with the two verticals. One is spices segment. In spices, we have again spices as well as blended spices. And in wheat flour, parallelly, we are working with the wheat flour. So these are the two segments, verticals we are working in the Srivari Spices.
All right. Very good afternoon, Mr. Rathi. Wanted to understand why Srivari has the right to win in this competitive industry. If you can help us with some more insights on this.
So we are standing out differently, and our planning is, our focus is on the quality actually. The quality is lacking in the market. Maybe a lot of brands are there and unorganized segments are there. So quality and healthy food is missing in the segment, in the FMCG segment overall, especially in the food. If you see, the quality is the biggest issue, challenge and issue. So we are focusing from day one. The Srivari principles are about the quality. First, our principle is on the quality. We are betting on the quality. So we are standing out differently into the market, and we are getting very good response, and the kind of sales we can see year on year or month on month also we are planning as a very good numbers and growth because of the quality and nutritious food we are focusing on.
Right, Mr. Rathi, also tell us what are the channels and the markets that you're targeting to increase your sales. What are your areas of focus?
So presently we are working on the general trade. As a general trade means kirana and wholesaler shops, regular our traditional shops. So we have in Andhra and Telangana overall 15,000 outlets. We are working on that segment, as well as we are our focus is on the modern trade. Also, we are working in modern trade with supermarket chains like Vijeta Supermarket, Ushodaya Supermarket, Balaji Garden Bazaar, as well as now again we are working with the e-commerce platforms like Big Basket, DMart Online, and as well as we are parallelly again we are working in the with the B2B channels with the Sol and Jumbo Tail. And our as of now we are working in the two states as Telangana and Andhra Pradesh, and our focus is soon we are going to move in the Maharashtra as well as Karnataka.
All right, if you can also throw some lights on the working capital cycle.
Yeah, working capital cycle basically it's a in the general trade or you see modern trade average out of 45 days of working capital cycle. This is a payment cycle, sir. As well as we have to maintain the flow stock about around 3 months of the inventory we have to carry due to because of the we have to maintain the quality parameters. So we have to minimum average out we have to maintain the 3 months of stock. We have to carry 3 months of stock with us.
Right, Mr. Rathi, also right now you are a your major revenue comes from Hyderabad. Do you have any more plans to cover more regions going ahead?
Yeah, as I said in the last question, as I added that we are now moving towards the Karnataka as well as Maharashtra both. Already we are working in the two states, and now we are planning to move in the two more states.
All right, and also, Mr. Rathi, given that you do have your presence in some of the wheat flours as well, and as we know that India is indeed a big consumer out there, help us understand some about the price trends as well. How are they shaping up? Because we are seeing that the food inflation is still very high in India, and given the commodities, we have seen price hikes in a lot of commodities, be it tea, sugar, and rest more. But how specifically are you seeing the price trend moving for the commodities that you deal in?
See, as if you see focus on the inflation, food inflation, that will not come down. Year on year, the prices will be increased due to the problem that the challenges are into the market. Now, agriculture's or lands are actually they are converted into a commercial lands. So production and as we see year on year, there is no growth in the production. So definitely it will be a challenge. Price will be always challenge and continuous it will be increasing.
Right, Mr. Rathi, as I can see from FY23 to FY24, there has been an EBITDA margin expansion and it's currently stands at 16 odd percent. Going forward, are you likely to sustain these margin levels?
Yeah, definitely. Actually, we are parallelly with one more vertical. We are planning D2C. So direct to consumer, we focus with the big portfolio as we are coming out with the oil also. Within 2 months, oil launch is already the process. So oil, we are focusing on the cold press as well as double filter oil without any chemical process, and it's a completely natural process. Both the oils are. So in that, with that vertical add on and D2C, will definitely maintain. EBITDA will be definitely maintained as well as revenue growth also will be maintained as in the past years we can see.
All right, with this, we'll let you go on that, Mr. Rathi. Thank you so much for taking the time out and speaking with us. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back.
If you like this video, then like, share and subscribe to ET Now.